to go into our key objectives. So what you should walk away with tonight is what is financial planning? Why is financial planning important? And the next steps you need to take in order to secure your business your financial future. So let's start off with, I'm going to give you a little story because I really want you to understand why it is so important to have a financial plan. If you guys always, if you remember the famous Amos cookies, I know it's a little late tonight and everybody's kind of probably had dinner or in the process of getting, but I know we're talking about cookies, but stay with me. We're going to get to the end of it in a minute. But with the chocolate chip, famous Amos, it was created by the gentleman that you see on the screen as well. His name is Wally Amos. And also on the screen, you can see where it says not so famous Amos. So a lot of things happen between the founding of famous Amos cookies and the ending. So what happened? So Wallace Amos, he was born in Tallahassee, Florida. He was an African-American talent agent for the Willie Morris Agency, and where he represented individuals such as Diana Ross and the Supremes. So he was a great entrepreneur, what I call a hustler. He was a visionary. He was really out there. And so he started Famous Amos in 1975 in California. And this was off the investments of two individuals, Marvin Gaye and Helen Reedy, for $25,000. So he had an investment of $25,000, in which he then turned into a $30 million a year revenue, $25,000 to $30 million in that time frame. So that is amazing. However, within a few years, the business started to lose money. He started to sell off stakes of the company, which means, just say if you are not in partnership in your business right now, it's just you, that means you own 100% of the business. However, if you start to sell off stakes of the company, just say if an investor gives you $20,000 for 10% of that your business, they give you the $20,000, they take 10%, you now own 90, they own 10. So what he started to do, he started to duplicate that effort several times to the point where he had no equity at all, trying to keep the business afloat. He ended up filing for bankruptcy in 1996, and he ended up writing in his own term, all I've done since it's amassed debt and missed payments. So all I've done in that time frame from having $30 million a year is amass debt and have missed payments. And so further in my research, I was looking, and it even said that in March 2017, he created a GoFundMe account just so that he could stay afloat and have rent and food. This is a gentleman that was making $30 million a year, and that he ended up now leaning on individuals to help him just simple rent and food. This is why it's so important for you to have a financial plan. You can be a visionary, you can be a great entrepreneur, you can really have the passion behind it, but if you don't have the financial steps and plans in place, it can really destroy your business. And so let's jump right into it. So these are three of the topics that a lot of my clients kind of had questions and concerns about. They didn't have a lot of information about. So I'm going to talk about them tonight. I won't do a deep dive into them. I will only do just a brief conversation. Personal finance is going to be our first topic. How much does it really cost to start and run my business? It's going to be our second topic. And then financial statements. So personal finances. You cannot have a thriving business if you are stressed about your finances. If you are stressed about your personal finances, you don't know how your bills are going to get paid. You're thinking about where's my food going to come from. You're not going to be able to be a creative, have a thriving business, even think about the business, because you're going to be stressed about your personal finances. So making sure that those things are intact in the beginning, your savings, your emergency savings with that, your insurance, your retirement, making sure those things are in place so that you don't have that to worry about. Also, when you start a business, typically banks don't allow you to have lending in the beginning. So you weigh heavily on your personal finances, your savings, and things of that nature. So you want to make sure that you have the adequate amount of savings there to even have the business to thrive, to get started. Also, your credit. Your credit needs to be at a certain number in order so that you can start to apply for these things. Again, you say, Rashida, why does my personal credit score has anything to do with my business? Well, once again, in the beginning, you don't have business credit. So any financial institution is going to look on your personal side to see, are you credit worthy? Now, I want to say this. If those things are not perfect, this does not mean you cannot start a business. What this means is you need to get connected with a financial coach to start that process so that you can begin the steps in building and having a thriving business. So get your personal finance in order. So don't make it as an excuse as I don't have this together yet. No, go ahead and start so that you can start working on your business goals. Our second topic here is, how much does it really cost to start and run my business? So I get a lot of entrepreneurs, we have conversations, and the first thing that they bring up is, well, I don't have enough money to start the business, or I can't keep the business going because I don't have enough money. Well, how much money do you really need? Like, how much do you actually need for the business? If you can't answer that, then there's no way you can really get to the goals that you're trying to get to without answering that question. So you want to start with having a business budget. And in your business budget, every step in your business, you're going to have a budget. Whether that's startup, year 5, year 20, you're going to have a budget that needs to be in place. So in that budget, you're going to have your cash required. That's going to be in your budget, your cash required for necessary labor and materials, your total startup costs, your day-to-day maintenance costs, revenues needed to support your business operations, and your expected profit. These are what your budget is going to indicate. All that's going to come from a budget. And then the 3 main elements of your budget, as you see on the screen there, is your sales revenue, your total costs, and your profit. So your sales revenue, this is extremely important. This is where, are you going to make money? Are you really going to make money with your business? So you want to make sure that you anticipate your sales as closely as possible on a monthly and yearly basis to see how much money are you actually going to bring into the business. Your total cost is going to be a combination of variable and fixed costs. Variable cost is going to vary. So variable costs can be your sales month to month. They may be high, they may be low. That's going to be variable. Your purchase cost of inventory. So if you just say if you have a shirt business and you have a certain amount of inventory coming in each month, that may weigh differently each month depending on your amount of sales. So those are going to be your things that vary each month. Then you're going to have fixed costs. Your fixed costs are going to be things like your rent or your mortgage. For just say if you have a brick and mortar location where you're operating out of, whether you have a good month or a bad month in sales, those things are going to be there regardless. So you want to make sure that you have your fixed costs there, because you have to take that revenue out each month or each year, however you and your landlord has decided to do so. And you also have some semi-variable costs, including that as well. That's going to include your employee, their wages that they will have, your telephone bills, things of that nature. So those are semi-variables for that. Your profit. So your profit should be large enough so that you are able to pay back cash investments and pay yourself. So I'm going to say that again. Your profit should be large enough where if you have any investments coming in, you can pay back your cash investors and also pay yourself. This is one thing a lot of my clients, I had to kind of knock on the head a little bit about. You have to pay yourself, you guys. You are in the business. I know this is our passion, this is our purpose, but we have to have a living as well. That's just being realistic about it. You have to make a living. So you want to pay yourself. That is a part of your budget, making sure that your salary is included in your budget. And so our next topic is financial statements. With your financial statements, you guys, a lot of times we don't have these things readily available. So even if it's personal, just say if you're a full-time entrepreneur and you're looking to buy a home or buy a car, these are some of the statements you're going to need to show. In addition to paying yourself out of the budget, you're going to need to show if your business is thriving. Is it a viable business? Are you making money? Are you able to scale? So you need to have these financial statements. You have your balance sheet up there, your income statement and cash flow projections. These are 3 statements you need to have readily available at all times. You can't get a business loan without it. You can't get a line of credit, none of those things. You have to show how is your business functioning and where is the revenue coming from. So your financial plan determines whether or not you have a viable business. So in your business plan, if you don't have a financial plan, and I will go far and say if you don't have a financial plan in your business plan, you don't have a business plan, because it takes money to operate the business. So your three statements up there, we'll start with your balance sheet. Your balance sheet is going to have your assets, your liabilities, and your equity. So your assets, your liabilities, and equity. Your assets are going to be things of if the business owns equipment, any money you have in the bank, any petty cash, net cash, inventory accounts. That's all going to be a part of your assets. Then you're going to have your liabilities. These are things that are short-term debts or long-term debts. Again, that could be a mortgage if you have a brick and mortar location, if you took out a loan, a line of credit, anything like that. Those are going to be the debts that the business has. You get your equity out of that once you have your assets minus your liabilities equals your equity. And your equity is how much your business is worth. So your assets minus liability equals your equity. Your income statements. This is also known as your profit and loss statement. It's going to be an overview of your sales and expenses and your net profits for a given time frame. It's going to show dramatic increases in product returns and cost of goods, and it's going to determine your income tax liability. Right now, we are filing taxes, and I know in the conversations in the group, the P31 group, and also in conversations with my clients as well, this is maybe the first time you're filing taxes. In your income statements, this will show how much you owe in taxes each year, whether that's on a quarterly term. My clients, I have them doing each quarter to set aside their taxes. You can do it, even go further than that and do it on a monthly basis, just however you operate, get with your financial coach to see what's best for the business. But this is going to help you determine how much you owe in taxes for your business. Also in there, your cash flow projection. So this is not confused with your cash flow statements. So your cash flow statement shows how much the business, how much came into the business in the past. Your cash flow projection is what's coming in the future. And this is how you get investors involved. They want to see, what are you going to do in the future? How are you going to scale? How are you going to bring income in the business? So it indicates when expenses are too high. So if you have, let's say if you have a t-shirt business and the manufacturer that you're using to make your shirts, you want to see what are the margins between how much it is to make the shirt and how much are you profiting off that. You want to make sure you understand that, because you may need to get another manufacturer. Your expenses may just be too high. The cash flow projections allows you to see that so that you can make those decisions. It also gives you an idea of how much investments that you need in the business. So can you go out to investors and ask them to invest in your business? This allows that to happen. And then also, if you are looking to get a loan or a line of credit, the banks are going to look at this to see, what risks are they taking? Are they able to give you the money that you're asking for based off where the business is headed? What has the business done and where the business is headed? So those are 3 statements that you want to make sure you always have in advance. We're going to stop there because I can go all night and talk about this forever, you guys. But definitely, you can see my social media channels there, Instagram, Facebook, and LinkedIn. I always try to shoot out information all the time on there. And then also, schedule a financial planning session with us. And I would tell individuals all the time, we are a nonprofit organization. So if it's not us, get someone. I just want you to get someone, because I want us to thrive. I want us all to grow, but I would love to have you a part of my Green Chips family. Not only are you going to get someone that's going to really help you, that's knowledgeable, that's going to help you get to your goals, but I'm also going to be a person that really understands the behaviors and the relationship behind that. And also in that P31 group, as Brittany kind of mentioned in the beginning, I'm a praying woman, so I will be praying over your finances as well. We will make sure that there's biblical principles in there as well to help you succeed. So thank you, Brittany. Give it back over to you.
Rashida, you got me over here like, woo, yes, child. This is so necessary. And I'm excited because what our members don't know is that we're in partnership together, so that when our membership launches at the end of this month, there's an offering for your services, for your financial university. If I'm saying the name wrong, please correct me. I know you have a specific name for your university or for your course, but it's going to be offered to our members at a discount. And I'm super excited because this is so necessary. And just understanding how this ties back to even our history is just amazing. And, you know, our ancestors fought for us to have the same equality that others, the knowledge that others, the majority already have. And we are fighting for that every day. And a lot of us walk into this ignorantly. So I just truly appreciate you. I'm humbled to even have you as a part of our team. And just here to offer this amazingness. There were a few questions. Okay. So I want to ask those